everybody, it's Randall here. Just checking in to let everyone know what's going on in Pennsylvania here in the real estate industry. As most of you know, we are a non-life sustaining business, so we are required to stay home, as are most Pennsylvanians right now. And we are not by law allowed to perform any services that require that we leave our homes. So I've heard a lot of questions over the past weeks about visiting vacant properties. Can we do this? Can we do that? Can we do the other thing? There's a really easy litmus test for that. If you need to leave your house to do it, then no, you cannot do it by law. Nobody likes that answer, but it is the unfortunate answer for almost everyone here in the state right now. We can still perform a lot of our duties remotely, and that's good news for a lot of people. But there have been some changes lately that I thought it would be important to do a quick video on, let everybody know what those changes are and how you might continue your real estate transaction during this shutdown. So first thing I'd like to talk about is if you have a contract already in the works, there could be some good news for you. If that contract was signed prior to March 6th, so if it was fully signed and executed, buyer and seller both signed it, ready to go before March 6th, you are able to complete your transaction. The state has allowed that inspectors and appraisers and other essential personnel will be able to finish the things that they need to do for those transactions in person. The only caveat to that is that you cannot have more than 2 people together at once. So, you know, if you wanted to bring your entire family to your home inspection, you're not going to be able to do that. And in fact, I usually recommend you leave the home inspector by himself, or at least maybe just 1 or 2 people go anyway. So that may change the way a settlement usually happens, because typically that's a whole bunch of people in a room. But title agents are going to have a different way to do that right now. They're either going to handle it one person at a time, maybe they can do some of it remotely, or maybe they have a way to have a socially distanced closing. I don't know, that's something that your title agency is going to be able to answer for you. But the good news is that you will be able to finish the contingencies on that contract and close as scheduled, or pretty close to as scheduled. Now, if you have a contract that was executed after March 6th, you've got a little bit more of an issue, because you are not allowed to do any of those things. So that was an exception that was made just for people who have a contract executed prior to March 6th. Now, if you have one of those later executed contracts, all is not lost. Your deal is not going to necessarily fall apart. The Pennsylvania Association of Realtors has put out an addendum, a brand new form. It's called the COVID-19 Addendum. Obviously, that did not exist before, but it basically allows for that contract, for the contingency dates to be extended on that contract. It has 3 basic parts. The first part is that the buyer and seller must both agree that by no fault of either of them, they are not able to complete this transaction on the dates that were originally laid out. The second part is where you choose how long beyond the release of movement. So when the ban on travel is lifted and everyone's able to get back to work, how long after that are you going to extend your dates in order to complete the contract? So it's 30 days if you don't put anything in there. If you think, for instance, that you might need longer than that, maybe you are sick or someone else is sick, then, you know, definitely put a longer period of time in there. This addendum is only good for the amount that you put on line 2. So if that amount of time expires for any reason and then the contract takes longer, you either have to fill out a second COVID-19 addendum with new dates, or you need to fill out a different kind of addendum that would basically do the same thing and extend the dates. Part 3 of the COVID-19 addendum states that if those dates are missed from line 2, if you don't do it, let's say you put 30 days in there and you can't complete it by 30 days for reasons outside your control, the contract can be voided and the down money will be returned to the buyer. So that's basically what the COVID-19 says. And if you have a contract that was signed after March 6th, yeah, actually, even if you have one signed before that, it would be very smart to have your real estate agent fill that out, get it signed by both the buyer and the seller so that you are both protected. It's not enough to just say on a handshake, yes, we agree, we're both going to extend these. You want to be protected. You want to get it in writing. Whatever it is that people say verbally is meaningless unless it's in writing, and then it's got to be signed by all parties. So keep that in mind. Now, on to people who do not have a contract. If you're a buyer or a seller and you can wait, you should definitely do that. I mean, this is all going to be getting more back to normal over the next couple of weeks, and a couple of weeks in the scheme of things, if that doesn't make a difference to you, then you should definitely wait if you can. If you need to get started right now for whatever reason, there's a few things that you can do. It's much easier for sellers. Sellers, you can contact your real estate agent or find a real estate agent remotely. You can go through the listing presentation, sign all the paperwork, get your home listed now. That can all be done remotely. You may have to do some things to help the people, to help the real estate agent, like take some pictures or measurements or such to get the contract filled out. So those are things the agent would normally do for you during or after the listing presentation. And, you know, but it's pretty minor. Everybody's got a phone camera nowadays, so even if they're terrible pictures, you can at least get something up on the internet and listed if you absolutely need to sell your property now. There are reasons why you would do that, but if you're thinking, hey, there's really low inventory right now because everyone's taken their property off the market and I'm going to be one of the few and that will make my property stand out, well, it's going to stand out, but just remember that buyers can't come and see your property. So you're not going to have 20 buyers. You'll be lucky if you have one buyer who would be willing to put your property under agreement sight unseen. And that leads me to what you can do if you're a buyer. So if you are one of those buyers who maybe you have a contract on your house that's set to settle at the end of April and you don't have a place to live yet. So in that case, you may need to make an offer during this time when you can't physically go see the house. That is something you can do. Two things you need to do when you make that kind of offer. Make sure your agent is doing this for you. The first one, like I just talked about, you need to sign the COVID-19 addendum because you don't know when you're going to be able to bring that contract to fruition. The second thing you should do is you should write an addendum, a contingency that says that your offer on that property is contingent upon viewing it in person. You know, maybe you're seeing it's that perfect ranch, it's the colonial in the right school district, it's whatever it is you've been looking for. That property just popped on the market and you need to put an offer on it. You don't want to lose it to someone else. Put the offer in, make sure it holds your place in line, but then you get maybe set 3 days. So 3 days after the travel ban is lifted, in the addendum, it will say you are able to go and visit that property in person, and you will either say, yes, I accept it, we're continuing as written, or you can say, no, I reject it, I can't live in this place, it's terrible, and I lost my mind for a second, please cancel the contract. That's absolutely fine, and that's really the option that you should take if you need to put an offer in sight unseen. It's not advisable, but it's not impossible either. So I want to talk a little bit really quickly because it's very uncertain right now, but I'd like to talk a little bit about the future, the potential future of what's going to happen in real estate. So right now there's very low inventory. We started with low inventory coming into this crisis. We've not listed a heck of a lot of new properties. There have been a few that came on. They were either homes that already had the contract and paperwork filled out, or perhaps they were filled out electronically, or who knows. But there's been very few of those. And a lot of people have taken their homes temporarily off the market. So in general, we went from a tight inventory situation to an extremely tight inventory situation. There are very few properties listed right now. So it's not a great time to be a buyer because there's very very little selection. So I don't know what's going to happen with that. A lot of realtors think we're just going to pop right back, and all of the spring listings that we would have normally had are just going to be pushed out to summer. And I do certainly hope that's what happens. I hope that the economy returns the way it's supposed to, but as everyone knows, economics is a little bit more voodoo than it is an actual science. So 5 economists will tell you 5 different things, and you know, it's impossible to know which one of them is going to be right. So it's going to be a gamble what's going to happen, but those are some of the options. Some other things that are going on with financing. Financing is going to change a little bit. People who were able to get an approval before, if you were borderline on your credit score, or maybe your income to debt ratio was close, you may no longer qualify. So it's very important to talk to your mortgage broker regarding that, and make sure that you are still qualified to purchase a property, because that has changed recently. And basically, here's what happened. There are a lot of things that affect how this works, but one of the big things that has happened is that the federal government, in an effort to help bail out the mortgage industry, purchased $250 billion of mortgage-backed securities. And if you don't know, mortgage-backed security is basically when you buy a mortgage, when you get a mortgage, I should say, that mortgage company services your loan. They take your payments, they process the paperwork, they pay your taxes, but they sell your loan on the secondary market, and all of those loans are packaged up into something called a mortgage-backed security, and then investors buy those because they're very stable. When you put them into a large group, that's a large group of, basically, you're making money off of people who pay their mortgages, and you know, if you run out of money one month, if you're short, what are you going to pay? You're going to pay your mortgage, you're going to pay your credit card. Obviously, you're going to pay your mortgage. It's a necessity, so it's a very safe bet under most circumstances to purchase mortgage-backed securities. However, what happened, because the government purchased $250 billion worth of these mortgage-backed securities, they essentially lowered the interest and return on them by purchasing so many of them all at once. For contrast, just so you can understand, during the last downturn in real estate, they only purchased $80 billion worth of mortgage-backed securities total, and they just purchased $250 billion. So what mortgage bankers do is they lock in rates, and then they hedge their bets against that interest rate, because if they lock in a lower rate for a customer and then the rate goes up, they lose money. So a hedge is basically just insurance against them losing a ton of money. So they might hedge within a range, let's say. So while you as a consumer want to lock in your mortgage to ensure that you get the lowest rate, you gamble a little bit when you do that. Say you lock in today at 4%, well, you're gambling that it's not going to go down to 3.5%. But the mortgage banker on the other side of that deal is locking in at 4%, and he's betting on the fact that the interest rate isn't going to go up to 5%, where he could make more money. So that being the case, all of these hedges against the interest rate going down have been basically, they've come due, and there's been what they call a margin call, when they have to pay all of the investors to increase the value of the stock up to the original amount. So the stocks, these mortgage-backed securities, have lost value, and so the bankers have to pay money out to get them back up to the original value. So that means they have very little liquid capital. And I know that they are definitely worried about coming foreclosures. That's another thing that costs them money. It costs them money, not just processing, but it costs them money because it's a loss of income. So we think that there's going to be a lot of not necessarily foreclosures. It's not the entirety of it. There's a lot of different aspects to this, a lot of different reasons why a mortgage banker is going to lose money in the coming months. One of them is that federally backed loans, that would be your FHA, your VA, your USDA loans, you can apply for a forbearance on those for up to a year with basically no documentation. And the mortgage broker can't ask you for any documentation. So what's going to happen is those loans are just going to go on hold, and it's going to be that long that the companies are not going to be getting any income from those buyers, from those people who have those mortgages. Another sector that is maybe a little bit surprising is the Airbnb sector. And if you live in an area where there's a lot of travel, then there may be a higher percentage of Airbnb, but believe me, they are pervasive. They're everywhere in the country, even in places that you wouldn't expect them to be. A landlord can make a lot more on an Airbnb than they can on a regular month-to-month rental in many instances. And we've seen landlords building an Airbnb empire where they've got 10, 15, 20 mortgages on these properties. The problem is that people can't go anywhere right now, and we don't expect the travel industry to return to normal for quite a long time. So those landlords are either going to be foreclosed on, they're either going to default on some of those mortgages or all of them, because they only have so much cash and they're stretched too thin. So since they don't have the liquidity to keep those payments up, they're either going to let some of those properties go, or they may try to enter those properties into the month-to-month rental market. There's still going to be the same number of renters, so now we've got regular month-to-month rentals that were already there, plus we've got this flood of Airbnbs, all of them trying to get a month-to-month renter, and now you've got them competing. So now we're going to have regular landlords with their month-to-month apartment buildings who are struggling to make ends meet because they've got a much higher vacancy rate than they've had in the past. So all said, there's a lot of upheaval going on right now. It's something to keep your eye on. The rates are still very low. If you're thinking about refinancing, you should absolutely do that. If you've got a rate that's above 4%, call your mortgage broker, find out what is going on. A refi is not anywhere near as risky as a new mortgage. They know that you already live in the house. You're not going to be likely to move out very soon. Maybe they've already made their money on you. You know, they typically make their money back break even in about 3 years in most circumstances. So if you've been in your house 10 years, you've already given them a lot of profit, and there's no problem with a refi. And the rates are so good right now, that's to your benefit. So this may harm people who are looking to get a new mortgage though. So again, when that money becomes tight and there's not a lot of liquidity, that's when the mortgage bankers are going to try to give those mortgages to only the cream of the crop. I mean, think about it. If you've got $100,000 to loan out, are you going to be giving it to the guy who can barely qualify, or are you going to try and find, you know, the top 10%, the people who are putting 20% down and are a much less of a risk? The other thing is that we're probably going to see a return to points in the market. If any of you know what that is, that's essentially paying interest up front. And that's a way to ensure 1 point equals 1%, by the way, of the total loan amount. And what that would ensure and what that kind of secures against for the mortgage bankers is that they're going to make some of their money at least up front. And they're going to have to pay for these riskier loans. So when they make a loan on somebody who is borderline, that person might have to pay a premium in order to be qualified. And it's something we haven't done in a long time. Nobody likes points. Nobody likes to pay for points. And, you know, but Many people will remember there was a time when the interest rates were 12%, and it was common to pay points because nobody wanted to pay 12%, so you'd put the money down up front to pay down your interest so you could get a decent interest rate for the life of the mortgage. And then, of course, everybody refinanced as soon as the interest rates became normal again. So there's just a lot of crazy stuff going on, a lot of different things to think about. Hopefully we'll soon be back to performing real estate as normal, but in the meantime, if anybody has any questions or if you have any problems, give me a call. Visit my website, by the way. Been working on that. It's www.comehometopa.com. And I've put that all together, written a bunch of articles, and designed it myself. I do have a brother who's in IT, and he helped a little bit. But anyway, check it out. Let me know what you think. Drop me a line even just to say hey, because everybody's bored right now. And I hope everyone has a great long weekend, and I'm praying for nice weather to at least get out in my own front yard. Have a great day, everybody. Talk to you soon.